Today, we're going to pull back the curtain on something you probably use all the time but never really see. We're talking about the hidden vault of India's stock market, the critical, invisible plumbing that makes every single trade possible. Yep, we're diving deep into CDSL.
Think about it. You tap buy on a stock through your broker. A second later, you get a confirmation. But have you ever stopped to ask, who is the official scorekeeper? Who holds the absolute legal record that says you and not someone else own that share? Well, I can tell you it's not your broker and it's not the stock exchange. The real answer lies with a company that acts as the master ledger for the entire market.
Most people just assume this is some kind of boring back office service, just a glorified record keeper. But that couldn't be further from the truth. The reality is, companies like CDSL are the absolute core of our financial infrastructure. Seriously, if they were to just stop, the entire equity market would grind to a halt.
So here's our game plan for today. First, we'll unpack what CDSL actually does in its digital vault. Then, we'll look at its amazing, annuity-like revenue engine. After that, we'll explore its nearly unbreachable competitive moat. We'll check if the financials actually back up the story, and then we'll play devil's advocate and look for kill switch scenarios. And finally, we'll wrap it all up with a final verdict.
All right, first up, the market's digital vault. Let's get right to the heart of how this master ledger for the entire system actually works.
So a depository is basically the ultimate source of truth. It maintains the master list of who owns what. It's the reason all our shares can be held and traded electronically in an instant. Without it, can you imagine? We'd be back to dealing with stacks of physical paper share certificates. No thank you.
The whole process is actually pretty straightforward. You place a trade on an exchange, right? Then, a clearing corporation sorts out the money and the shares. But the final, most crucial step is when the depository, a company like CDSL, officially updates its master record to show you as the brand new owner. That's the moment it becomes legally yours.
Now here's where it gets really interesting. In the whole of India, a country with over 1.4 billion people, there are only two of these depositories, CDSL and NSDL. This isn't just a market with a few players, it is a textbook duopoly. And that has massive, massive implications for how this business works.
So, how does being one half of a duopoly turn into such an incredible business? Well, that brings us right to our second section, the annuity-like revenue engine. This is all about the magic of charging tiny fees on a gigantic scale.
CDSL's money comes from a few different places. You've got the annual fees that every single Demat account holder pays. Then there are tiny fees on transactions. They also get paid for processing IPOs, handling corporate actions like dividends and stock splits, and even providing KYC services. The best part is, no single stream is overly dominant, which creates a really stable and recurring revenue base.
The formula that powers this whole business is just elegantly simple. They charge a very, very small fee, but they multiply that by millions upon millions of accounts and transactions every single day. That simple multiplication creates an economic engine that is incredibly powerful and just keeps scaling up.
And that huge volume part of the equation? Well, it's getting a massive boost from a huge structural trend, the financialization of India. Especially since 2020, we've seen an absolute explosion in new demotic accounts, mostly from retail investors like you and me. More investors means more accounts, and more accounts directly translates to more revenue for CDSL. They basically get to ride this massive wave automatically.
Now you might be thinking, wow, this business model is amazing. Why hasn't a competitor just shown up to take a piece of the pie? Well, that brings us to Section 3, the unbreachable regulatory moat. Let's talk about why this is a duopoly and why it's probably going to stay that way.
See, the competitive advantage here isn't just one thing. It's like a medieval fortress with multiple layers of defense. First, the regulatory license you need is practically impossible to get. Then you have a massive network effect. Everyone from brokers to banks is already plugged into their system. And finally, the cost and headache of trying to switch millions of Demat accounts to a new provider would be absolutely enormous.
Let me be really clear about this. This isn't a business you can just start with a bunch of venture capital and a clever app. It requires incredibly deep integration with every single part of the financial ecosystem. What this creates is one of the rarest and most powerful types of competitive advantages out there, a true regulatory moat.
Okay, so the story's fantastic, right? A protected duopoly with a scalable business model riding a massive trend. It sounds almost too good to be true. So let's do our due diligence and move to Section 4, checking the financial quality. Do the numbers actually back up the narrative?
And honestly,
The numbers are just jaw-dropping. Because it's a technology platform, it's an asset-light business, which means its efficiency is off the charts. Its return on capital employed, which is just a fancy way of measuring how well a company uses its money, has consistently been over 40%. That's incredible. Its operating profit margins are super high, and because the company has basically zero debt, its profits convert almost perfectly into hard cash. This is pretty much the textbook definition of a high-quality business.
But hold on, no investment is a sure thing. A really solid analysis means we have to put on our skeptic hats and actively try to break the thesis. So let's move on to Section 5, potential kill switch scenarios. What could go so wrong that it completely wrecks this investment case?
The single biggest risk, without a doubt, is the regulator. Because CDSL operates in this protected duopoly, the regulator, CB, has the power to step in and cap the fees they charge, to protect consumers. If CB were to ever decide to aggressively cut those fees, it would directly hit CDSL's margins and permanently lower its profitability. This is the big one to watch.
A more distant but still real threat is technology. I mean, could a new system, maybe something based on blockchain, eventually make a central depository obsolete? It's theoretically possible, sure, but these kinds of changes in core financial infrastructure take decades, not years. So this is a very long-term risk to keep on the radar.
And finally, there's the operational risk that keeps everyone up at night, a catastrophic cybersecurity failure. Imagine a massive data breach, or even worse, an error in the ownership records. The entire system is built on a foundation of absolute trust and reliability. A major failure here could shatter that trust in an instant.
All right, we've looked at the amazing business, the powerful moat, the stellar financials, and the potential risks. So let's bring it all home with our final section, the final investment verdict.
When you strip away all the complexity, the core idea here is just so simple and so powerful. As more and more Indians put their savings into the capital markets, more Demat accounts get opened, and every new account directly leads to more revenue for the underlying infrastructure. It's a beautifully simple chain of logic.
And this brings us to the most important point. It's crucial to understand what CDSL is and what it isn't. This is not a speculative, hyper-growth stock that's going to go up 10x overnight. The best way to think about it is as a financial utility. It's the essential toll road that every single person participating in India's capital markets has to pay to use every single day.
So I'll just leave you with this final thought to chew on. As India's economy and its markets continue their massive growth journey, are the best investments really the flashy companies that grab all the headlines? Or could they be the quiet, indispensable, invisible engines like CDSL, just humming along in the background, compounding wealth one tiny transaction at a time?